Investors and traders, welcome to the channel market chart pattern. Today is 2nd of March 2025. Hope everyone is having a great weekend. We'll be taking a look at the key US markets that we follow in this video segment. As always, this video is for educational purposes only. It is not a financial advice. So we are taking a look at our timing model. This is on the weekly level. We have a key date timing coming in on the 31st of March week. Because it is a weekly chart, we should give it plus and minus 2 weeks. So we'll be just looking at and watching this really carefully, how what sort of price action we begin to get once we get near to that date. We have already started the month of March. Okay, so let's start by taking a look at the US dollar. So this is the weekly chart for the US dollar, and one of the key things that we had been discussing for about a couple of weeks now was this level around 106, 106.12, because that was the 38.2% retracement of this low to this high, and we had a very nice ABCD pattern also completing nearby. So we were looking at it for a potential good support to come in, and last week we saw the dollar actually rally for the week and close higher. So we are seeing clearly strength coming into the US dollar. We also have this 20-week moving average, just where last week it also found some support from that as well. And if we just move down to the daily chart for the US dollar, this is what we can see. We had this green ABCD a little bit lower, so with the possibility of the price getting right here, but now the market actually closed above the 20-week moving average. I suspect that if there's gonna be a turn, we might just get that right here from the 107.55 level, which is a 38.2% retracement, and that might just be a pullback. And it does look the dollar is getting stronger. Now, something really key and pivotal happened this week in the marketplace, in my opinion, with regards to the interest rates and also the US dollar. So let me actually show you the chart of the 10-year treasury yield. So that's TNX. On the y-axis we have the yields, and here you can see that we were watching for this ABCD pattern potential, but the market actually closed lower. It has also broken this trend line. Now the chances are that actually the yields are pulling back, or the 10-year treasury note is actually rising in price. This is something really interesting and very important, which took place last week, and in particular last Friday, to make a note of, because what we had seen previously was a regime in which the US dollar was getting stronger and the yields were also moving higher, and if the yields were moving lower, the US dollar was actually moving lower. But what we saw last week, and in particular last Friday, is actually the US dollar getting stronger but the yields falling. So this is something really interesting development that took place. And then if we were to just take a look at the shorter end of the curve, here we go, you can see how this has broken below the 38.2% retracement. Now it can go actually much lower, and I wouldn't be surprised that if 3.55, which is basically the lows which took place last year 25th of September, they get challenged and broken out, and we could in fact be in a larger ABCD, where we can see the 2-year treasury note moving really much lower, and maybe getting closer to the Fed's target of 2%. What I really mean is basically we could see this move towards that 2% yield, and in my opinion, the Federal Reserve, they watch the 2-year yield really carefully for their Fed funds decisions. And what the market might actually be indicating is that we could in fact have the Federal Reserve moving in a direction which is from their hawkish pause to actually reducing the interest rates. So the Fed fund rates could actually fall, and this is where I really like to take a look at the 2-year Treasury note as a key benchmark in my work. So if you were just to take an ABCD, right here. I'm not going to label it right now, but I will. I think there is a strong possibility of about 2.95 to about 2.8, so roughly let's say 2.9%, and that is going to be the 1.618 expansion of this move, which is pretty extreme, and it will also be an ABCD of this. And what it will also do is, but we are a little bit further away from that, it will also mark a 3 drives to a bottom pattern as well. So I believe once we get into the 3% to 2.9% region, that might actually mark a pretty strong bottom, and we could see a rally something similar to this actually take place from here. Maybe we get up above right into the structural resistance and pause right there, but it looks like the 2-year treasury note is telling us that there is a strong chance after breaking this 38.2% retracement that the yields are actually moving lower. So actually let me make it a solid line like this, so it's much easier to see or visualize this one, and also like this. So break of this 38.2% retracement was pivotal in my opinion, and I think once we begin to get a further follow through, that is going to be a suggestion that the yields are actually moving lower. So this is what the 2-year treasury note is telling us, and then let's go and take a look at the 10-year treasury note futures. So on the y-axis we have here we go, we have the price, and here you can see that we were watching for this key pattern formation, which was in shaded area. We have this key level around 110 15 as a possible strong resistance, but the market has actually gone past that, so I'm going to remove that. Let me remove that, clear up the chart a little bit. The most important thing is that my market actually break above this 38.2% retracement as well. So going back to what we saw on the TNX chart, this market might have put in a double bottom right here, and it might be actually a pretty significant development for sure, but it might end up being a pretty important low as well. So in fact, if you just take a look at this, this is like a double bottom right here, but this bottom is above this bottom of which took place in October of 2023. So the market is making a high, a low, a higher high, a double bottom, but it is a higher bottom with respect to point A right here. And now what we are seeing, in my opinion, is a throwover because of this trend line. The market is getting above that. It'll be really nice to see some further confirmation to this. So this is, I think, a strong indication that this market is moving higher and the yields are in fact moving lower. So really interesting development taking place. And taking a look at this on the weekly chart here, you can see that really nice move. I think it's now likely to go and challenge the swing highs. So 111.20 is on the cards, and it's not too far away from where the market closed last Friday. So really interesting what is taking place. And then if you were to take a look at this on the long bond futures, here you can see that the market found a good support right from here, which is the 78.6% retracement. Let me actually draw it for you to be exact. There you go. So really important bottom which came in, and now it's getting into this where there's some resistance coming in from the moving average, and I believe we might have a 38.2% retracement right here as well. I believe it's more like 50% now. Yeah, there we go. So it might have to tackle a little bit of resistance right here, but it is looking stronger. So really interesting development taking place in the interest rate, in the world of interest rates. And the bond markets, because they're so interest rate sensitive, they're able to actually sniff out the developments with regards to inflation and then the interest rates much quickly compared to the equity markets, because equities have something called earnings, and the companies are much more complex because of their operations, and if the earnings are going well for a company, the company is likely to do much better because the company is producing profits, earnings, and then they might be paying a dividend out, or if it's a growth company, then it's just really investing it back into their operations, that sort of stuff. So it's always more difficult to analyze the companies. So here we go, looking strong on the TLT as well. Now gold, something really interesting happening in the gold. This is the weekly chart, and let me remove this one. So we saw gold actually closed lower by 2.79%. And I don't think we have seen gold. The only time we saw was this in 11th of November 2024, where it closed 4.62%. But it is happening right at a critical level, which is this. This is the pattern that we had drawn. So the market has actually pulled back. But the interesting thing is that gold is also, in my opinion, at a critical level here. So sitting at a really nice support level from 382. Okay, so a little bit lower actually from the 38.2% retracement, coming in around 28.25, which is not too far away. So it might actually get into this red box that we have drawn, where we have some structural support, but it is likely to be a pretty strong support for gold. And the gold could rally. Now the interesting thing is that we have seen this pullback in gold, and also we have seen last week the dollar actually rise as well. So maybe there is some impact also coming from that side of things. Now I'm not analyzing the commitment of traders data or the open interest, because I've seen that shift a little bit. So I think for now we'll just purely focus on the price action and our key levels. So keep on watching this 2825 as a key level for gold. And I think there's pretty good support coming in for gold from this level. Now if you were to take a look at the COMEX silver, a little bit of a different story, but it's also right at support levels as well. So we're really interesting where the markets are, all of them actually. In fact, I will be doing another video for the MAGA stocks that we like to follow, the technology stocks, and each one of them, a lot of them are actually making really key patterns, and which are likely to be potentially good bottoms potentially, for example in stocks like Tesla, Meta, etc. So I will do that video, maybe release it tomorrow. Now let's take a quick look on the stock indices, because I want this video to be a little bit shorter. So here we go. This is the S&P 500 cash daily chart. So we have this point where we were looking for an ABCD. The market closed below that, so that has been invalidated. So I will actually remove that. Here we go. Here we go. Now one of the things is, it does appear the market is in a range bound fashion. So top of the range, now it was testing the bottom of the range. It came right to the 78.6% retracement of this 13th of January 2025 lows, and we have seen a nice rally off here. Now it looks like this rally is likely to continue in next week, by the looks of it, as long as this level is not taken out. And then also, if we just look at it from a symmetry perspective, this is all the retracement, the entire retracement that the market had done since December. Then it found a bottom on 13th of January, and boom, it did pretty much exactly the same. So I think we have a confluence of these two things coming together. So in my opinion, Friday is really important, because the number of factors I mentioned with regards to the interest rate markets and decoupling of the dollar strength and the interest rate markets, that is really significant, that correlation that had existed. I think it seems to have broken down. If this week we keep on going in that direction, that will be a further confirmation. So that is a big change what is taking place. And then something really interesting also happening in the crypto markets as well. So here we go. In the crypto market, you can see the Bitcoin. So I had done a separate video about Bitcoin, and I was mentioning this 85,000 level, and I was saying that right here when it was breaking this, that if you break this level of 3rd of February, the Bitcoin is bearish, and it could go as low as this 76,000 and roughly around 72,000 level as well, which it did pretty much. It came very very close, with the low being 78,197. And over the weekend there has been news, and this is also actually an indication of the risk on assets such as Bitcoin. It's rallying. I think it should actually also help other risk assets such as stocks to rally as well. So we have some further confirmation, or a really interesting development in the crypto markets happening as well. Okay, so let's take a look at the futures. So S&P 500, and the futures have just opened up, and they have opened up pretty much unchanged with a gap up a little bit higher of 16 points. So this is really really interesting. So I will remove this because our that key point was broken to the downside, but the market actually, what it had done is also something really interesting. It went right to the 1.272 expansion and the 78.6% retracement, and we have a confluence of two things coming together. So that is, test of the bottom of this range, and I think it does look like the market is likely to rally um, from here. And the entire expansion of this range is 1.272, comes around 62.45. This is what we'll be taking a look at. Really quick look at the nasdaq 100. Nasdaq 100 also pulled right back and made a double bottom, potential double bottom right here. With the action that we are seeing in the S&P 500 futures, I believe that this market is also likely to rally in early part of next week in particular. And then a quick look at the NQ. So in the Nasdaq futures, it did take out these lows right here, but closed higher. So in fact, if we were to just take a look at this from an ABCD perspective, it had actually made an ABCD there. So that is very very interesting. The expansion of this range, remains around 22,009, and so roughly 23,000. Now let's take a look at YM. Dow Jones. So Dow Jones is really interesting because it made a new high, and which with the potential of being a double top, and it just went right to the 61.8% retracement, which held. So some really interesting pattern right here as well. And then Russell 2000. So these are all levels which are support levels. Russell 2000 also read last Friday, but it has had a pretty massive retracement. Here we go, about 14%. And if we just go back and take the lows of, I'm just going to clean up a little bit. There we go. So this is the lows of from the lows of 5th of August. Here it respected the 61.8% retracement, and here right at, no, it's not at the 78.6% retracement, less than that, but from the September it came very close to that. And I think we have an expansion level here, 1.272, which it seems to have respected thus far. So really interesting development taking place in the stock indices. I think the risky assets are likely to rally. We have some upside targets as well, as long as those key levels or bottoms that we looked at, they remain intact. Now the key development that took place is with regards to the interest rate markets. They have been rallying and yields have been pulling back, especially on the shorter end of the curve. We have seen that. So that is actually an indication with regards to also Bitcoin rallying over the weekend, that there is a risk on sort of a trade. And the what we have seen thus far might actually have been a pullback, which we're in the equity markets, and we had some key levels that we were watching to the downside. Some of them actually were broken to the downside, so the pullback actually has been larger than what I was anticipating. But still, the 13th of January low has been respecting S&P 500. So some of these key support levels have been respected. So this is what is we are watching in the key markets, in the equity US markets. And the NYA, it just retraced to the 78 point, excuse me, 38.2% retracement of the 13th of January low. So this is another really interesting development, um, because at one time it looked like it wants to fall over, but it's finding support. And this is the index which includes ADRs as well as with foreign stocks. So really interesting one. So thank you very much for watching the video. Good luck and good trading. If you found this video of educational value, give it a thumbs up. Please do subscribe to the channel, and if you do that, hit that bell icon button. That way you'll know when the new videos are posted and you will not miss on anything. Have a fantastic weekend and speak to you guys soon.